All right, we are live.
We are live. Hello, folks, and good morning. We're very appreciative for you participating in today's webinar. Thank you so much for your time. We appreciate it. I'm Gary Pinckney, Executive Vice President with Couch Brownsdorf. A lot of folks, I'm looking at the attendee list, I work with on the lawyers' professional liability coverage. So thanks so much for participating. For those that I don't work with, it's good seeing you, and I appreciate you participating today. The motivation for today's webinar, I deal with firms every day on the lawyer's professional liability malpractice front, and I definitely see an uptick in cyber-related claims for law firms. There's no doubt. And the policy itself, the lawyer's professional liability policy, it's not the answer to protect against the cyber exposure. Frankly, what you see on the lawyer's professional liability policies are kind of like ancillary throw-in endorsements that, God forbid you have a cyber breach in the office, it may afford a reimbursement of $25,000 or $35,000 should you go out and get an IT vendor to remediate the problem in-house. The true exposure is not covered. It's not covered. So, as I thought about this webinar and discussing it with Eric, I mean, my motivation is, for years, the cyber-related coverage was viewed more as a discretionary coverage where, you know what, I don't truly need it. I think we've entered the phase now where with this uptick in exposure, I think the firms really have to strongly be encouraged to get it. As I look at the firms that are participating today and who I deal with every day, there's no doubt you guys are facing unprecedented challenges in securing sensitive client data. Real estate firms, for example, you have a social engineering exposure, you have a wire transfer fraud exposure. PI firms, you capture health insurance data, you capture personally identifiable information. Criminal law attorneys, defense attorneys, you're capturing social security numbers, credit card information. The landscape's replete with exposure. So, Eric brought this one particular case to my attention, and I thought it would be, collectively, we felt it would be a great opportunity to have a webinar just to educate you guys on the exposure, get a sense of where you're coming from and where you feel your exposures are, and ostensibly get a deeper understanding of the law firm related exposure itself and kind of a way to implement some actionable strategies and tools to counter this exposure. So I'm going to turn it over to Eric. Eric's the CIO, Chief Information Officer over here at Couch Brownsdorf. He does an excellent job. He's a thought leader on this subject matter. So I'm glad he's able to participate. So thank you so much, Eric.
Well, great. Thanks, Gary. Appreciate that introduction. A lot of you folks know Couch Brownsdorf. You know Gary. Perhaps you don't know me quite as well, so I'll give you a quick intro. I'm a recovering IT guy, which means that over the past 15 years, I've focused on the nuts and bolts of IT systems. I'm the Chief Information Officer at Couch Brownsdorf. About 4 years ago, I realized that there weren't enough technical IT people involved in the cyber risks and cyber liability insurance business. So we embarked on creating the cyber liability practice group here at Couch Brownsdorf, and essentially that's where I help our attorney clients and our clients across the agency, largely in the mid-market commercial space, helping to better understand their cyber risks and to understand the insurance solutions that are available if something were to go wrong. So the first thing I typically start out with when we talk about cyber risk is actually not a cyber risk. It's more focused on check fraud and positive pay, because it's something that should be implemented if you cut any checks out of your law firm at all. So just a question for everybody, who's using positive pay? Feel free to respond in the chat if you are, if you're not. But I'm going to share a quick story with you guys. If you've ever seen the movie Catch Me If You Can, you know that the main character in that is pretty much principal business was washing checks and trying to pass off fraudulent checks and try to evade the police. And that's why he would move around quite a bit. Here's actually an email from CFO of management team at a client talking about a meeting that he had with one of the local members of the local township police after they had seen some check fraud. Luckily, this client has positive pay implemented. I just wanted to share that the sergeant in this particular case noted that he wished everyone had those type of controls for check fraud to prevent it, and that's positive pay. So if you're not using positive pay with your bank right now, it's free. You basically pre-authorize the check that's going out the door before you send it to the particular vendor that you're trying to pay. And your bank won't cash any check that doesn't match the list that you've given them that's approved. So very important there. Also very important for ACHs as well, as there's so much fraud in that particular place right now. So interesting coverage for that. Typically on a crime policy, you'll see a forgery and alterations coverage that can come into play with that sort of forged check instance. You'll probably have some coverage from your bank for it. But it's a good example of the mix of the controls that you should implement and the insurance coverage that you should think about in the case that something like that might happen. So we're happy to talk about that in more detail. But I'm going to jump into cyber. So as Gary mentioned, cyber risk in the past and cyber liability insurance used to be referred to as sort of a discretionary coverage that you typically only have if one of the contracts you signed with a client required it for you to carry it. Well, what's happened now is just as professional liability is a distinct and important exposure for your firm, cyber risk is rising in that regard for law firms. And so as we think about the Microsoft security posture by industry, and Microsoft, if you're in Office 365, they give you a security score. And they recently came out with a set of benchmarks across many different industries, sort of showing where various industries are in relation to the average. You'll see that in the financial services space here on the left, because of a lot of regulations, either be it Graham Leach Bliley or the various PHI, the PII and personal financial information regulations. They tend to have very great security scores in the 65s, and we're seeing the legal industry lagging behind in that particular area. And this is why we talk about controls so often in terms of things we're going to get into later with multi-factor authentication, software restricted policies, next generation antivirus, the stuff that your law firm can implement pretty inexpensively as layers of controls that help enhance your cyber risk profile and are complementary with your cyber insurance program. So one of the main reasons I'm involved in this is because CVEs, or common vulnerabilities and exposures, are growing at a rapid rate. You see here back in 2016, we had about 7,000 CVEs released by vendors of IT software and hardware for that matter. And then in 2017, a drastic jump up. And what's causing this is a few things. Threat actors are out there actively trying to hack into businesses. They're hacking into, obviously the large businesses like Home Depot and Target, recently MGM, very large businesses. They're also finding footholds in hacking businesses that are typically underprotected and in an area where they're they don't think they're at risk. And the reality is that in 2023, the total amount of ransoms paid and collected by ransomware threat actors crested $1.2 billion just in the US. And so that is growing at an incredible rate, in addition to what you see here in the 15% increase in vulnerabilities that happened in 2023 over 2022. And so what does that mean? it means that cyber claims are on the rise. Typically in business email compromise, as you see here, 45% of cyber claims are initiated because of this entry point, followed by funds transfer fraud, ransomware, and then a segment of other intrusions. But the key insight to take away from this is, although ransomware is a smaller component of the leading loss event, the average loss or the average ransom is around $310,000, right? And so I like to ask a couple questions about how your organization would respond. Thinking about a ransomware attack, that a threat actor comes into your systems, encrypts your computer, encrypts your company database and all your files. How would you respond to that now? And thinking about what incident response looks like. Who would you engage? Would you call your IT vendor? Do they have the bandwidth? Do they have the expertise to help stabilize your systems and secure them? Who's going to negotiate with the ransomware threat actor? What does that look like? So we start to ask questions like how does your organization respond if you've had a business email compromise? Somebody gains access to your email box and begins by sending invoices to your clients with modified payment instructions, right? What if a client pays a $100,000 invoice and your company doesn't receive the money? How would you start to work that out with the client, right? And think about our firms that practice real estate, right? And do work in the title insurance space. How would your firm react to a social engineering attack where a threat actor poses as a bank on a mortgage payoff and tricks your staff into wiring $100,000 to them, right? And some of this some coverage can be found in insurance policies for this, but also there's an element of controls. Like if you're practicing real estate, are you following the ALTA guidelines for wire verification, right? And we're very familiar with that, as we also run a title agency, and we understand the controls that need to be in place for that. Another aspect is your law firm auditing the vendors that you're using to make sure that they have the appropriate coverage? For instance, the real estate agents that you're working with, or the title insurance agencies that they're working with, are you sure that they have adequate cyber coverage and limits available?
Hey,
so
Eric,
Eric,
if you don't mind, let me chime in real quick on that point. Relative to the professional liability, it's interesting you raised that point, because oftentimes, I'll get a call from an insured law firm that, does work for a lender or a bank or, a municipality, and they require a certificate of insurance relative to their professional liability coverage. So I don't see an issue where, like Eric just brought up the point, why can't you ask your IT vendor for a certificate of insurance reflecting the fact that they're covered?
And you should.
So I think that's from a risk management perspective, I think that's a really positive way to approach that exposure. You ask them, because if they don't have coverage in place, you're going to be in a situation where, God forbid, there's a breach and a lawsuit, mandatory joinder, you're going to get named, you're a deep pocket. So, yep. I would, strongly encourage you to look at your IT vendor, say, hey, look, you want our business, we'd appreciate a copy of your certificate of insurance. In fact, we want to be named as a certificate holder, because
Sure.
If you're a certificate holder, that'll ensure where if that policy lapses, you're notified of it. Yep. Okay. So, I think that's an important component of anybody's risk management practice. I think if you could ask, certainly do.
Yeah, just a quick story about a recent breach that happened. There was a firm out of, I believe it was Singapore, that the threat actors had targeted the controller of the firm, and this was a large multinational corporation, and they invited that controller to a Zoom meeting, which had 10 people in the Zoom meeting, all of which were deep fake AI powered folks that look a lot like Gary and I on this meeting, right? So we're real. I'm here, right? But the technology behind deep fakes and large language models is so sophisticated that it actually fooled this controller into wiring $23 million to at the direction of the quote unquote CFO in this particular case. It's a tragic accident. It should not have happened. They should have followed the procedures that they had in place, but it did happen. And so as LLMs, ChatGPT, AI start to play a larger role in our businesses, they also play a larger role in the threat actors. You know, we follow the security community very closely, and some of the messages we got out of the hacker convention that happened last year is if you're a threat actor and you're not using ChatGPT to try and break into businesses and do social engineering attacks, you're really not doing your job. It's a scary environment right now with the rise of AI, and so we have to be ever more prepared, right? And so as we think of the quantity of personally identifiable information and what the notification costs are behind that, depending on the type of data you have, that the cost of the record, the per record cost for notification could be upwards of $75 when it's all said and done. And so the question really is, how would your organization respond to that if you were to lose a laptop on a train, for instance? The one thing that's not often talked about with cyber liability insurance is how data breaches and network security events create loss of business income. And so if you imagine a firm that does $36.5 million a year in revenue, we use that number because it's easy to calculate the per day impact. Essentially, each day is $100,000. And so a week is $700,000, 2 weeks is 1.4 million, and 4 weeks of downtime is 2.8 million. So as you're thinking about sizing your cyber liability limits, it's important to contemplate what the business interruption component could be for a particularly severe breach, right? But let's talk about some of the unique exposures that legal organizations tend to have, right? Every organization now is relying on data and technology, legal especially, you know, so when you think of your law firm, you know, obviously you're working with email, you're working with payment processing software, you might be working with a docket control system or docket management system, maybe a conflict avoidance system. You may be engaged in using some e-discovery tools, using some social media tools, and then your client portals that your clients use to access their documents that you share. But also as a matter of discovery in certain cases, you may be getting a whole bulk of emails from a client as part of a matter that you have to sift through. And in that could be a lot of personally identifiable information. Now, the question is, what if that is breached, and what is your duty from a professional standpoint to protect that data, right? So one of the leading attack vectors into your systems is going to be phishing. So the important control on top of that is educating your staff on being default suspicious, and them understanding what sort of verification procedures you want them to go through with authenticating inbound email, right? And what sort of controls you have on their computer as to what types of software can run, right, are very important, right? So we think about, like, when was your last cyber risk assessment? This is something you can work with us through, or your managed service provider, your IT folks, making sure that you're keeping track of user accounts that have access to you, right? When employees leave, you got to shut off access, very important. Making sure you have MFA or multi-factor authentication on for VPN access or email access, also very important, right? I'm sure you guys have heard that there was a pretty large data breach at the American Bar Association, where usernames and passwords were leaked on the dark web after a web security incident. I'm willing to bet that many of the attorneys that logged into the American Bar Association used a password that they've used elsewhere for their email, for instance, or other websites. So very important that you're cycling passwords on a pretty regular basis, but also using multi-factor authentication, right? So what type of data do law firms typically have? Gary mentioned it before, based on certain areas of practice, what you might want to be worried about, but generally it's corporate confidential data, right? Personally identifiable information that's non-public, personal health, protected health information, and then financial data, right? So as we think about the legal landscape of regulatory compliance, you have various HIPAA laws, you have PCI DSS, which is payment card related stuff. So if you're taking credit cards, you're taking ACH payments, protecting that data, and various consumer privacy laws across the country, right? Each of the 50 states has a different model. Some are adopting the California methodology, some are adopting the New York methodology. But overall, right, if you were to have a data breach today, what would your costs be, whether you have insurance or not, right? The idea is there's going to be some direct cost to respond to the data breach. So there's going to be an incident response firm, that's a forensic IT firm that's involved in helping you to get a hold of your systems, understand what happened as part of the breach, and make your systems secure again, right, by deploying some tools to help out with that. There's also going to be a cybercrime component, right? The leading cyber risk right now is ultimately ransomware, and it comes in a couple different flavors. We participated in incident response on site with a client in late November, where we helped them from the moment that they filed the claim and were aware of a ransom that was on their systems. We were on site for 7 days, 20 hours a day, helping them come back online. We were able to get them back online in 3 days, but there's also a component of them deciding whether or not they wanted to pay the ransom. So in that case, they had insurance coverage for it, and they made their decision. But the ransoms are sized based on what the threat actor believes is your ability to pay, right? So that can be anywhere from, let's say, $50,000 to $5 million if you're a very particularly large firm. We've seen over the course of 2023 and even early this year, we've seen ransom payments that have ranged from $50,000 to about $400,000 after the final negotiations occur. Right. And then there's liability to others, right? So you have personally identifiable information, data that's in your care, custody, and control. If you happen to lose that or there's a data breach, you have some culpability and professional responsibility in protecting that, as Gary had mentioned. And so there's some impact in terms of monetary perspective in that regard, and as well. If your systems are offline for a certain period of time and you can't do your work, there's a business interruption component to it, then lost revenue and, in fact, reputation. I know that our business is based almost entirely on reputation, Gary's especially, in a business that's almost 100% referral based. If you start losing clients due to this data breach, it can be very impactful on your business. And so we go through those things to think through, what the typical cost buckets are, right? And so incident response could run anywhere between $150,000 to $200,000. Cybercrime and ransom could be in the range of $300,000 to $400,000. Your liability to others is something that's going to be calculated on a per record basis. So that could be, let's just say you had 1,000 records of personally identifiable information at $75 a pop. You're talking $75,000 in notification costs. Business interruption, if you're a firm doing $3.5 million in revenue a year, you're about $10,000 a day. If you're down for 2 weeks, that starts to really add up. And then, recovering your data and reputation repair, right? So we talk about the coverage wording here, and really what matters is making sure and it's very easy to see in a cyber policy what's there and what's covered, but it's hard to see what's not included, right? And so as we look at a cyber renewal here on the right, you'll see some of the typical coverages and buckets that I mentioned before, with incident response, cyber extortion, which is the ransom payment, third-party type coverages as it relates to cyber and network security liability. But you see some things that aren't checked here. For example, computer fraud, funds transfer fraud, and social engineering fraud. All things that are particularly important if you're practicing real estate or have any money in your bank accounts whatsoever, right? The other one is if you send out invoices to customers, what's missing in this particular cyber renewal on the right-hand side is invoice manipulation coverage. So that's the coverage that steps in when you have a client that receives an invoice from you, but you didn't send it because you've had a business email compromise, and it has modified payment instructions, and that client pays that bill to that nefarious third party, right? So instead of going after that client saying, hey, you didn't pay your bill, which would cause quite a bit of pain, or telling that client that they need to file a claim under their cyber policy, there's coverage under invoice manipulation to reimburse you for what that payment would have been if that invoice was properly constructed. So Gary, rather interesting, you deal with law firms of all shapes and sizes here in various revenue bands. We've done some benchmarking internally across various revenue bands in the legal industry, looking at the limits that they're carrying in terms of the gradients in the marketplace. And so you'll see, for firms in the $5 to $10 million range carrying about $1 to $2 million, that's the vast majority of firms, but you see firms in that range also carrying 2 to 5 and 5 to 10. And, as I tend to work with firms across verticals and they ask, how much coverage should I purchase? We do a lot of benchmarking and show them what their peers are purchasing, but we also show them what their potential exposure is in a cyber liability incident. And so we tend to like to see them somewhere in this 80% category, depending on their revenue size. But again, the choice of limit is completely up to what you're willing to self-insure, and what you want to have the insurance company step in to provide coverage for.
Yeah. Eric, if you don't mind, I'll chime in there. Again, what I've seen is historically it was viewed as a discretionary coverage. More folks are starting to inquire about it. When we seek the coverage, I think it's important to note that from a premium perspective, proportionally, it's not as much as the lawyer's professional liability malpractice premium. It's just not. I would say it's a fraction of that cost, but it's becoming a necessary coverage. What I see is it could be, say, $1 million policy, but within the context of that limit, that's an aggregate limit. There are sub-limits attributable to wire funds transfer fraud, social engineering. What you'll see if you do have coverage, take a look at your policy, because that coverage may be capped at $100,000. Well, social engineering, frankly, that's where I've seen, the last few claims that I've heard about that are law firm related pertain to that. So that's where the true exposure lies, and it's capped at $100,000. Some will cap it at $250. Some will do. I haven't seen anybody more than $500. So, if you do have a policy in place, take a look at those sub-limits to see if it actually captures, the coverage that you desire or need. But proportionally speaking, again, the premium is not as high as the lawyer's professional liability coverage, the malpractice premium.
And Gary, there's also some overlap between cyber coverage and traditional crime coverage, right? So there's some computer fraud related endorsements on crime coverage that are important to make sure that your firm, if you don't have an existing crime policy right now, the coverage is particularly inexpensive, but has a pretty broad form and should be considered, especially if you are in the business of moving money around or participating in any way in that you view you might have a social engineering type exposure. Right? I mentioned before, are you performing risk assessments on your vendors and business partners? If you're this is real specific to the real estate space as an area of practice, but are you asking your real estate agents that you're working with if they have appropriate controls and insurance, right? Are you asking your title agents if they have cyber liability insurance? Are you asking your software vendors to make sure that they have appropriate cyber liability insurance and appropriate controls? Now, I'm going to shift the conversation just for a second as we wrap up here. In addition to cyber liability insurance, what can law firms do? And the answer starts to get a bit technical, and the high level thought is make sure you're talking to your managed service provider and your IT folks, right? It's important that they be involved in this process. They may be involved in filling out the application, but they're critical in this process. And so you want to start to ask them questions like, do we have multi-factor authentication? Are we protecting our entry points against brute force attacks? How secure are our backups, right? Are they offsite cloud backups? Do we have appropriate patching, right? Are we instituting vendor patches within a critical period of time, right? And I say 48 hours. I'm pretty aggressive on that. But the reality is, some cyber liability insurance policies have provisions that require you to apply patches within a period of time, right? And so it's also important to make sure you're not on any out-of-date systems or end-of-life systems, right, that the manufacturer is no longer providing patches for. And so this is a more holistic discussion. I don't want to get too technical into the IT side because I'll start to see people falling asleep on the Teams meeting. But it is very important in terms of, as Gary would mention, the professional responsibility of protecting client data. And as it relates to, at the board level, at the ownership level of your law firm, thinking about security as something that ends up being a competitive advantage over time from a reputation perspective. A little bit about the cyber insurance marketplace. We saw during COVID this massive rise in underwriting requirements because people were working remotely, and underwriters started to focus more on multi-factor authentication because the physical security of the office was not something they could rely on. But in general, the messaging I want to deliver here is that the maturity of your cyber controls, as that rises and you implement more layers of security controls within your network and within your business, and better train your staff on what to look for, and also be your, kind of boots on the ground security folks, your premium rate per $1 million in revenue for cyber insurance goes down. So as you can see here, as you climb this curve, the overall premium rate goes down because you're just a better risk from an insurance perspective. One thing I wanted to mention here, neglected software. I mentioned before, patching is really important. It's particularly important to make sure that your cyber policy, if it has certain requirements for patching within a period of time, you're making sure you're compliant with that and you're working with your IT vendor to stay on top of that. So now we're at a point where we can open it up for questions. Gary, I leave it to you.
Yeah, look, we welcome any thoughts, questions, concerns from anyone, even if this is being recorded. So I know we threw a lot of information at you, Eric, in particular. So, certainly digest it. We're here to serve. So historically, I work with the firms on the professional liability coverage, but like I said, the cyber exposure is an ever increasing one. It's not going to go away, folks. In fact, it's going to get more and more important from a risk management perspective. Proportionally, like I said, the premium, there are carriers out there. It's not a completely soft marketplace, but they're unique and nuanced in their questioning. It is IT centric. They'll ask about your systems that are in place. Like Eric said, the more protections you have in place, they'll afford coverage, because frankly, if you don't have like multi-factor authentication, a lot of carriers don't provide a policy to you. They don't even offer it unless you have that in place. So, if you do have it in place, that's great. You can get the policy, and premium perspective wise, it'll certainly bring it down. But it's an important coverage. The exposure increases every day. And we're here to serve, not only myself, but Eric as well. He's an excellent thought leader in this field. So we're here to assist you in any way, shape, or form that you deem necessary. And please know that we appreciate your time, guys. Thanks so much.
Yeah, absolutely. Thanks so much, Gary. And one thing we can provide if you're interested is a number of our cyber insurance underwriters provide external risk assessments that we're happy to run and show you and walk you through the findings from that, because you may just find that you have some security holes that you can particularly easily fix quickly and just up your security game just a little bit. We're happy to go through that with you. Gary, as always, is available to answer any professional liability concerns you may have and things as they relate to cyber. And if I can be helpful, I'd be happy to.
Thank you. Thank
Great.
you, everyone.
Thanks all. Take care.